I'm Ben Pollinger with ATEX Resources. We are currently drilling our Phase 5 drill program at the Valeriano Copper-Gold project in Chile and have already been putting out the best results on the project to date ever in the first few holes of this program. We're looking forward to putting out more in the next weeks and months.
Ben, good to have you back here in front of me, live.
Great to be back.
Right, it's been a great year for you last year. Obviously, a lot happened, and we kind of finished off with you got a new best friend.
We have a very good best friend that we're very proud to have here.
What were they trying to get out of this relationship of yours?
I think it's pretty clear. Like their philosophy, and we're talking about Agnico here. Their philosophy is to invest in legacy projects on world-class districts where they can be part of the evolution and growth of those districts. And I think that's been consistently our thesis all the way through this.
Right.
And I think with what we, especially with what we're seeing in Phase 5, that is playing true.
Right, Agnico, you're right. They're trying to kind of get after this district with a few other projects as well, and so they've got a very long-term view on this.
Very much so. I mean, this is a district that we think once it gets up and running is in production for 200 years. Right. Not a lot of places in the world you can do that.
Right. So there's a kind of massive roll up on a grand scale here. So that says to me that you're providing the kind of information that they want. You've got a resource coming out, I suspect, with Phase 4 and Phase 5 data to be included. That's for the market. Yeah. Your partner doesn't necessarily need that.
I mean, they like it.
I know, but they can assess analyze the data themselves, right?
Well,
so what are they saying?
Well, right now, I think everybody who's involved with ATEX right now is very excited about this potential. Like, so if you have the privilege of having our slide deck in front of you, it's my favorite slide. It pretty much tells the whole story. It's called A Tale of Two Deposits. Okay. Because we started off with this concept of this bigger porphyry, with this high-grade core of this porphyry, in which we were in the previous resource, which we put out in September 2023. We had 200 million tons of around a copper equivalent. 1% copper equivalent. I think now we're seeing something that's really grown there, and we're looking at something that's probably hopefully much bigger than that at that kind of grade. But along the way now, we've seen the evolution. So this will be the porphyry up here of these breccias, which we don't know what the vertical extent is, and we're consistently seeing 100 to 200 meters plus of 2% copper mineralization. Just to put that in context for you, Matt, $200 per ton, it would be the gross value of a 2% copper equivalent ton right now. So $200. So if you're looking at something that has, and I think we can point to something that has the dimensions that could get us between 30 and 50 million tons with potential for more of these, you're looking at something that's in $6 to $10 billion in-situ value. That can cover a lot of capex, and typically you'd see these things mined at like a $60 to $70 per ton kind of basis. Throw in royalties, throw in recoveries, all that kind of stuff. You're looking at something that can generate $100 per ton in margin, and I think that on a small scale, if we only have one of these, that pays for just about everyone else, and it gets this thing going, it gets it in the game, right? The bigger question then is we look at our geophysics. Because this mineralization is associated with a late staging overprinting event that's enriched in magnetite, so it shows up really well on the geophysics. Okay. And it's at the intersection of these the famous northeast-northwest structures. So now you've got, it looks like we might have 4 of these and another potential porphyry that kind of goes onto our neighbor's property. So the challenge here is how quickly can we get these in, realize whether they're real or not, because there's a huge difference between 50 million tons and 100 million tons and 150 million tons at that kind of grade. And we've always said we think this project becomes more and more world-class. Like this is a different order of being. So right now we're all very excited and very focused on this, what's happening above the porphyry. And we know the porphyry is spectacular, we know the project's spectacular, but this is a little bit of extra juice that we're trying to get here, and this will be the focus of the rest of this program.
Okay, but these breccias, as you say, they appear in sort of clusters, as it were. And you're saying it's quite, well, you're not saying it's easy to find, but it's
we're getting better at it. I mean, geology data is always retroactively confirmatory, right?
Right. Yeah. So as an explorer code, because like I say, we're saying there's a bigger district play here for someone with a big balance sheet to kind of get after. It's probably not going to be you guys. So, but you've got to kind of build up this kind of massive contained metal. Porphyry versus breccia, allocation of time, allocation of drill programs. What's the end game for you?
Look, I think there's a very long range of what an end game could look like for us. Like I think we are we're the fastest moving piece in what is shown to have the pedigree of being a world-class district. This is not bigger than just ATEX and Valeriano, right? Yeah. In a world in which you can add 200 million tons, and this is a complete arm wave, if you add 100 to 200 million tons at 2%, that generates so much cash flow, it can put just about anything into production, right?
Yeah.
And then our neighbors to the north, they're going to get their permits in a year, and they're going to start drilling.
Yeah.
We've got Codelco drilling just off our border. So there's a whole range of what happens here. But for us, as the custodians of this national treasure and shareholder capital, our job is to find the best way to the best possible return of capital, or the best shareholder value.
But what does that arbitrage actually convert to? Because you're in control of the timeline in a way.
Correct.
Right?
As much as we can, yeah.
Well, you kind of are now. You're very interesting. You're on the map. You're at the scale. You've got the potential to be as big as, well, go as far as you want. Access to capital seems, again, easier.
Significantly easier than it was last year when we were running around trying to sell the story with $5 million in our balance sheet, yes.
Yeah, it's squeaky bum time. Whereas now the Agnicos of the world, who presumably, if you keep delivering, will want to follow the money or even to top up, how they want to play that. But you guys, for your shareholders, I'm going to say, look, there's an end game here. We can keep drilling because it keeps delivering, but will you kind of get that the kind of return profile that you've had to date? Because it's been extraordinary.
Yeah, no, I think, going back to your rounding out your previous question, is the allocation of capital is clearly more focused now on the near surface stuff.
Right.
In the event that those breccias kind of daylight above the valley floors and they can be accessed with an exploration decline and drill, there are a lot of options here, right, that we need to kind of work through. But the bulk of exploration dollars going forward are going to be focused on those breccias. I think we've done a really good job, and we'll see a nice slug of indicated going into the porphyry. But the question is, what else is there, right? So to go back and kind of answer your point is look, what we love in terms of the themes that we're seeing in Chile and Argentina, just globally, copper is looking more like a consortium play now. It's no longer, go out, build the biggest project you can, use your balance sheet, and then you have to sit around and wait 5 to 10 years for cash flow to kick in. Now, we've seen Lundin and BHP consolidate the district, right? And I think there's probably room for more people to play in there at different stages. You've seen what, Escondida's 5 people in there. Collahuasi's 4 people in there. You've seen one of the things that I think is a really positive move is Codelco and Anglo Gold getting together on Los Bronces and Andina. Codelco taking a piece of QB2. I think when you look forward and you look at how copper development projects take forward going in the future, it's now a consortium. It's a partner basis. And we've got Nueva Union 50 kilometers away from us, 2 giants there, Teck and Newmont. You've got Agnico, which last week surpassed Newmont as the highest market cap gold company on the planet, sitting there. And then you've got Antofagasta, who's committed to Chile. I think you've got the right mix and the right chemistry, and it's just how that all comes together and what that looks like. And along the way, we've got ATEX really kind of, being the rising star and all this, and doing the work that is drawing eyes here. I mean, for me again, I think the biggest difference between Vicuña and where we are is 10 years of big budget, continuous exploration. And I think if you get that, maybe the Codelco discovers something at El Torrente, which is just off our northern border of our small block. We'll see Antofagasta back up and drilling in the next year to 18 months. We'll hopefully be able to expand our program to the next programs. I don't know how this all shakes out, but this district is becoming as exciting as Vicuña ever was. And I think with a lot more upside because the exploration is just not done. And I think, when you looked at what's happened with NGEx and with Filo and you look at the trajectory we're on, I think there's still a long way to run here.
Okay. I was talking to a company this morning. I was asking them just this question as a private company. Just this question: so, what is the end game? How do you play that in a market like this? The market you've described is there's a lot of players hunting copper, and it's big. There's lots of it. And whether you go with COMEX figures or futures, copper's sort of it's on the rise. It's kind of moving. Nothing exciting at the moment, but kind of getting there. And also in that backdrop, a whole ton of copper projects held up in development phase. You're making it sound like potentially there's a ton of copper coming on the market all at the same time. That can't be a good thing. Are we ever going to get an oversupply?
I mean, macro is not something I jump into now, but I'll take a copper, and we can integrate it into this answer. I think if you look at the amounts, like I watched a presentation by BHP yesterday, they're saying we need to add an Escondida every 2 years. So if you take all of the projects I just described and put them together, I don't think you get to an Escondida. So I don't think there's a problem. I don't think oversupply is the problem. I think the challenge for the industry is how do you build up the infrastructure that can successively bring on more supply on a more long-term meaningful basis, because you want to just boost that number, right? You want continuous production over a long period of time, whereas what you're seeing right now is you're seeing majors like taking bites around the edges for trying to maintain their position in the ranking in terms of copper producers for incremental production. You're not seeing those big projects come online. And I think when you look at most of the projects out there, the second tier assets that are out there that have been stalled, they're attractive at $3 to $4.50 copper, but we're not sure where that incentive pricing that they have to get built is yet. And until we get that into copper, you need something that has potential for high margin, that can be built smaller and then scaled up. And I think we fit that. We fit very nicely into that niche between what's out there, what could be out there, and the projects of the future that just don't have the grade that we're starting to show.
Right. Okay. And let's come back to that question around. Look, you've had a great year. This show, well, great.
It's just started,
right? Yeah. It's just starting, folks.
I feel like we're just stretching our hamstrings. We haven't even started to run yet, Matt.
Really, I can't wait till the gun goes off. Fantastic. But it's that allocation of capital, best return on capital invested, all of that kind of good stuff. And it's an exploration company. You are going to be putting out a updated resource stuff, right? Do we see you start going through scoping studies and economic studies, or do you stick with the knitting?
That's a very interesting question, and I would say there's a couple gates that you have to go through to get there. Right? First, I would say when you look at the project as it is today, it's far from defined, right? And I think the way to always approach an economic study or to think about doing something is when you know that you've got the best of the project, or you have to. And I think that we're in a position now that, as you said, we've got access to capital, and I think the people that would continue to fund us want to see us add value with the drill bit, because there's nothing else other than the drill bit that adds value like at this stage of the project, right?
But you say that, right? You're in rarefied air.
I'm talking the ATEX book. I'm not talking anybody else's book.
But you're in rarefied air, because most exploration projects, we've done the analysis last year, did not see a whole bunch of return or value attributed. So you're in a lucky position. So for you to say drilling still works for us. We will continue to do that.
And I would say we will eventually get to the putting it all together, because just because we're drilling doesn't mean we're not doing metallurgy, doesn't mean we're not doing geotechnical.
Well, it gives that. We know that
exactly,
metallurgy is good.
So we exactly 95% copper, 95% gold on a 200 micron. Good is not quite the word for it, but I would say pretty best in class. Okay. But we're still bringing all those component studies, all the work we do, the social work, the environmental work. We're upping all our monitoring. We're gathering more data. We're doing all those things that ultimately would fit into that. But we're not going to put a pin in it until we get to the point where we're confident that the best part of this deposit would have the most meaningful impact on upfront cash flow and payback is defined. Once we get there, then we'll probably go down that route. But I don't think we're there yet.
You remind me, so again, a conversation I had earlier this week, and someone said, you got to be careful you don't get too big, because you get a target on your back with NGOs and others. So that whole social license thing does continue to actually mean something. I don't want to go off ESG, eco warrior.
But it's a very, very important part, and something that's very near and dear to the DNA of our company. You look at our board composure, if you look at who we are in the work that we're doing. I'll talk about some of the things I'm really proud of. That we're, as a smaller company, we're surrounded by Teck and Newmont and Antofagasta and Codelco. No. I think because we're the most active, we've been the most active in the community as well. One thing that I'm incredibly proud of is we set up Starlink at schools and clinics, and came back and we did a site visit, and the clinics have set up their own telehealth networks using our Starlink. Wow, that's exactly what you want to see with community partnerships. Such a small thing, but it's made a meaningful impact on the lives of these communities. The other thing that was an initiative started and recommended to us and started by some of our team members, is something that we call Prep or ATEX. It's preparing people to come and work with us and work at ATEX. Okay. And we every year we take on the class of this year we'll do the class of 2025. Last year we did 60 people in the class of 2024. And
what age group?
We're talking so basically 20 to 40, and from the local communities, and we provide a credible source of employment, and we're trying to make it long term, where we train people as to what does a geotechnician do, what do you do around the camp, and provide them the range of options in what we do and keep them close to the project. And the number one thing about that is it means there's no misconceptions, as often happens in this business, between what's happening up on the hill and what's being heard down in the community. So we want the community to be proud of us being there. We want the community to be proud of the project, and we want everybody, they're a key stakeholder, right? That the idea here is to create wealth, and in a way that benefits Chile and benefits every stakeholder all the way here to Bay Street. But everyone along that chain needs to have a part of that project.
Yeah, and it keeps the wheels turning. It just stops those future speed bumps on the road ahead.
But I mean, when we can get into things like local procurement and like local partnerships and stuff, as you kind of move down, it becomes very powerful, right? And it's symbiotic, and that's the end game here.
Let's get back to the drilling, okay? Because I think that's kind of important. But okay, we get the upgrade resource, etc. But as you say, there's a lot more to be done, right? Access to
So much
capital
more to be done.
is there. It's cheaper. It remains cheaper money, and as you drive the share price, it gets cheaper. So that's all kind of good news. But what do you get after next? What's the next phase? Do we have a phase 6 yet?
Yeah, of course we have a phase 6. So I mean, look, so we're sitting on probably just under 50 million Canadian last time I looked. We've got another $90 million of warrants, of which 30 are in the money, and the other 50, 60 will be in the money hopefully next year if we keep doing what we're doing. So capital's great, right? But what we've seen is there's more kind of new stuff to go after, which is great. Like the world-class projects always get better the more you drill them, and this is definitely going down that. So we started with a certain number of targets, and now that target list has grown. And so now the phase 6 will be going out and testing new targets, permitting for next programs, looking ahead to where this project might go and making sure that we can drill holes into that. And a lot of that's going to be focused at that near surface, and then potentially, can we discover another porphyry? And I think if we do that, we've got a lot of work to do. Cut out. We're back into network, but I think the case that I'd make here is, as I said earlier, we're still stretching the hamstrings. Right. We haven't started running yet. There's still so much work to do. And if this is what we see in phase 5, what do we see in phase 6? So I mean, I don't get very excited very often, but I remain incredibly excited about what this project looks like here and where it can go in the future, and even what it looks like. Just to round out on that resource basis. Remember, in the 2023 resource, we had 3 fingers of intrusive material that were being diluted into the 1.1 billion tons of wall rock, 300 million tons of intrusive, with the core of that being at 100 million tons at 2%. Now we're looking at something in an envelope that's about 1 billion tons of intrusive rock, about probably 2 billion tons of wall rock around that. Right. We've got hopefully somewhere in the region of hopefully 300 to 400 million tons at 1 to 1.5% in the porphyry. And now we're looking at 30, 50 plus tons, million tons plus in these breccias without having tested all of them. It's a whole different ballgame in terms of where we were in 2023 to where we are now. And the grade of this whole thing is coming up. We're going to increase the confidence by adding more indicated material, and we're going to show more exploration upside. It should be a pretty compelling document when we get it done. Always a pleasure. Thank you.